Bloomberg has learned that some of Nvidia's biggest customers have been told that the prices of its AI service are going up more than 15% in many cases, with memory chip costs soaring. Asian markets will have to price in that news as well, as the Alibaba placement as we begin a new week. Our markets reporter Anthony Stevens joins us from Hong Kong. So lots of the same questions, the sort of existential questions over the expensiveness of various things within this AI universe. The Alibaba block, how does that set up the day for us?
Yeah, as you said, there's a lot of moving parts in the AI trade, but the fundamental part is flow keeps coming, right? There is a flood of AI paper coming to the market, and the Alibaba trade actually came really tight compared to where it should be trading, given how much the stock moves, right? It's around a 3 times ADV block. It came in 1 sigma move of the stock, meaning just a 1 standard deviation move for the stock. So it's quite tight, and you can see that there is a lot of demand for AI paper. It's seemingly insatiable, right? We're talking about IPO demand, IG issuance demand, and then private credit demand. So while that demand picture is still very strong, that sets up Asia quite well, at least in the kind of AI trade. But the weight of all of this issuance continues to put pressure on literally everything else, right? We saw the US momentum factor continuing to deteriorate. So the highest risk parts of the market are cracking, even though the market overall in the US is quite stable. And that is being reflected more or less in Asia as these bigger companies kind of find their feet and they return cash to the market in the case of Korea, for example. And we also have the Nvidia earnings in the back end of this week, right? So we get a big update from the top end of the AI trade, and maybe that starts to dominate as momentum underneath starts to pull back. So it'll be a very interesting session in Asia as we try to digest that huge flow alongside the Nvidia price hikes.